Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Hi, it's Whitney Sewell of LifeBridge Capital, and I hope you had a great Thanksgiving. Before we get into it, I hope you will like and subscribe and leave a comment, whether you're listening on the podcast, whether you are on YouTube. I hope that you will support us in that way. We'd love to hear from you as well and just better understand the news that you want to hear. You're welcome to reach out, email us at info@lifebridgecapital.com. We would love to hear your feedback in any way that we can improve this or the show in any way that would better inform you as an investor, whether you're active or passive. And now for this week's top real estate investing news. Real estate investing is on a roll. Homebuyers will eye more affordable cities in 2022. Home sales remain resilient despite low inventory. Home buying activity pushes mortgage demand higher. Affordability, a strong factor in top performing housing markets. Found out where Americans are moving to retire. Credit scores reach all-time high. And which top cities are attracting job seekers. Single-family homes are getting bigger. Multifamily construction sentiment improves in the third quarter. Real estate investing is on a roll. Real estate investors bought a record-setting 18.2% or $63.6 billion worth of homes during the third quarter in 2021, up by 16.1% in the previous quarter and 11.2% a year earlier, according to the real estate firm Redfin. This is the highest increase rate since the company started recording values in the year 2000. The typical home buyer's purchase cost was $438,770, which is 5.3% higher than a year earlier amid an increase in housing prices. Investors have traditionally banked on mid-sized towns where they can get a better ROI. Still, the pandemic heightened demand for housing in these areas with tens of thousands of distant workers looking for more room and better bargains. In the third quarter, the most popular migration destinations were Atlanta, Phoenix, Charlotte, Jacksonville, and Miami, although many of these cities face high risks of extreme heat, flooding, and storms. Also in the top 10 were Atlanta and Las Vegas. Real estate investors have crowded into these less expensive cities that offer more space and away from coastal job centers like San Jose and New York. But despite this, the company also noted that the housing market is starting to cool and cash-rich investors' activities are likely to slow down in the coming months. In a separate report, Redfin predicts that more home buyers will invest in affordable cities such as Columbus, Ohio, Harrisonburg, Pennsylvania, and Indianapolis, which have highly educated residents, and median home price is still less than $250,000. The 2022 Housing Market Predictions Report expects that there will be less likely relocations to Sun Belt locations than there were in 2021. Since the start of the pandemic, housing prices in Austin, Atlanta, and Phoenix have risen by 29%, 24%, and 35%, respectively, making them less appealing to purchasers who value affordability. In related news, home sales remain resilient despite low inventory. Existing home sales increased in October, marking 2 consecutive months of growth, according to the National Association of Realtors. Total existing home sales that include single-family homes, townhomes, condominiums, and co-ops rose 0.8% from September to a seasonally adjusted annual rate of 6.34 million in October. NAR Chief Economist Lawrence Yun explained that the continued resiliency of the market is due to inflationary pressures such as rising rents and ongoing remote work trend flexibility. Individual investors or second home buyers who make up many cash sales purchased 17% of homes in October, up from 13% in September. The median price of an existing home was $353,900, which is 13.1% higher year over year. Now, an observed unusual increase in home buying just before we enter into a slow holiday season is driving mortgage demand higher, according to the Mortgage Bankers Association Seasonally Adjusted Index. Buyers are rushing in during the traditionally sluggish Christmas season in anticipation of higher rates in the future. Given how expensive homes are today, some purchasers may be priced out if interest rates rise much, according to the MBA. Mortgage rates have been climbing higher for the past month and have already reached 3.24%, the highest level since April. In other news, affordability remains a strong factor in top-performing housing markets. Realtor.com explains that affordability and strong local economies remain the top factors on how buyers select properties. New Hampshire remains attractive due to its no state income or general sales tax policy, which is suitable for millennials, working families, and first-time homebuyers. Other housing markets that made that list include Burlington, North Carolina, Eureka, California, Rochester, New York, and Elkhart, Goshen, Indiana. Now, which states are attracting the most Americans moving for retirement out of state? Well, 13% of retirees are moving to Tennessee, according to a survey by a home services firm. In July, Bankrate ranked the volunteer state as a top choice of terms of affordability, below average living costs and lowest tax burdens in the country. Retirees also benefit from its wellness program and friendly culture. Other states that made the list are Florida, Pennsylvania, North Carolina, and South Carolina. 3 metropolitan areas from Tennessee made the top 10 of metro areas preferred by retirees. Pittsburgh leads the pack as a top destination among 7.2% of retirees. The study also revealed that married couples accounted for 77% of retirement moves, while only 23% were single, including those divorced, widowed, and those never married. In other news, credit scores have now reached an all-time high. Since the start of the pandemic, Americans' FICO credit scores increased by 8 points to 716 as an effect of the government's stimulus program, relief measures, unemployment benefits, eviction moratoriums, student loan repayment suspensions, and COVID restrictions. This allows many consumers to pay off their debts and finance their spending. But economists warn that the continued rise in the inflation rate, which is now at a 31-year high, could impact the overall national credit score as Americans will be paying more for food, fuel, and other goods. According to MarketWatch CEO William Lansing, the holidays have a seasonal component where consumers take on more debt that will affect credit scores by next year. In addition, pandemic moratoriums and repayment suspensions are soon to end, adding more pressure to consumer expenses. Still, Lansing notes that consumers can still earn a better credit score even with higher inflation if they demonstrate responsible payment behavior. Are you looking for a job? New York and San Francisco are out. Austin is in. Cities in the South and West are now the hottest spots for job seekers who relocate for better job opportunities and lower costs of living. Not to mention the good weather and more affordable housing choices away from New York and San Francisco that used to be top choices pre-pandemic. According to Realtor.com, Austin topped the list thanks to its tech hubs, including Dell, Samsung, Apple, and Google, despite higher rent and property taxes compared to the rest of the South. Elon Musk also announced his plans of relocating Tesla because of the high cost of housing in California. The median list price in October in Austin was registered at $549,900. Among the other job seeker-friendly cities that made the top 5 include Sarasota, Florida, Myrtle Beach, South Carolina, Asheville, North Carolina, and Nashville, Tennessee. Phoenix also made the top 10 with a median list price of $485,000. Are you planning on building a new home? Well, you might want to invest in something bigger. The median single-family square floor area has increased to 2,337 square feet as the third quarter, which is 6.2% bigger since the lows reached during the Great Recession. The National Association of Home Builders predicts home size to increase again due to shifting consumer preferences for more space to accommodate work and study in post-COVID-19 setup. This could mean a bigger impact in the housing market as existing homebuyers expand their spaces by remodeling or rearranging floor plans of kitchens and bedrooms. It should be noted that home size declined between 2016 and 2020 as more starter homes were developed, but the pandemic brought about evolving needs for increased indoor activities, which the NAHB has observed. And finally, the NAHB's Multifamily Market Survey reports that the Multifamily Production Index increased 5 points to 53 compared to the previous quarter. The MPI measures builder and development sentiment about current conditions in the apartment and condo market on a scale of 0 to 100. On the other hand, the Multifamily Occupancy Index also increased by 5 points, up to 75. The highest reading since the inception of the index in 2003. It measures the multifamily housing industry's perception of occupancies in existing apartments. The NAHB cites strong demand and limited inventory to keep occupancy tight, which makes the increase higher than the values recorded in the 1980s. The group also declared that 2021 is the strongest year for multifamily production that they've seen ever since. And that's it for this week's highlights. I hope you like and subscribe and share it with others who you know would benefit, other investors who are, whether active or passive. I hope they are benefiting from the show. We look forward to working with you at LifeBridge Capital. Have a blessed day.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.